Money Making Mitch.
Tell me something good, babe.
What is up, world? It's your boy Michel Valbrun, aka Money Making Mitch, and I'm here with Miss Erica Turner, the mortgage loan originator. What's going on, Erica?
Oh, not much.
Cool, cool. So thank you so much for being here and taking time out of your busy schedule to speak with me. Really interested in the home buying process and just wanted to educate my community on what people need to do in order to purchase a home, different loans that they can get. But before we get into that, could you quickly just introduce yourself and tell us a little bit about what you do?
Yeah, so again, my name is Erica Turner. I am a mortgage loan originator, and primarily what I do is get people pre-qualified for a home.
Oh, simple enough. Okay.
Yeah.
So what is, for someone just new and they're looking to purchase a home and they don't know what that looks like, and I'm sure for a lot of people it's overwhelming, what does that process look like?
So the very first thing that you should do really is speak with a loan officer, because a realtor really isn't going to want to go out of their way and show you homes that is out of your price range, so to speak. So when you come to me as a loan officer, I will be getting you pre-qualified based off the documents that you supply me, like your income, and I'm going to be pulling your credit score, things like that. And once I get you pre-qualified and I tell you how much you can afford for your monthly payment as well as for the price of your home, I will then supply you and your realtor with a pre-qualification letter. From there, I'm pretty much hands-off. You guys are house hunting, and I come back into the picture when that realtor supplies me with the contract. So from then, when I receive the contract, that's when me and my processor and the underwriting team get involved, and we try to expedite the process to get that clear to close.
Awesome.
Yeah.
So with that process, are there a ton of loans out there that people can choose from?
Yeah.
Or okay. Could you share a little bit about that?
There are, absolutely. So there's a lot of loans that the lenders and banks and credit unions typically have in common, such as the FHA, the conventional, VA, and USDA. Then from there, it may differ a little bit. Some lenders may provide programs that some banks may not. So it really is just important to speak with different people and figure out which loan product is best for you.
Okay. Well, with that, so it sounds like there's a ton of loans out there.
Absolutely.
And I would imagine there's obviously a lot of lenders out there as well. Do you recommend that people go shop for lenders or kind of jump around or just really stick with one? What's your opinion on that?
So that's a great question. I personally do believe it is very important to go shopping around. Now, I say that to say maybe speak with anywhere from 2 to 3 loan officers, because I compare it to like car shopping. When you're going to look for a car, you're not just going to go to one dealership and drive away after test driving one car.
Right.
You may go to the Toyota dealership, test drive different cars on that lot. Then you may even go to a completely different dealership, say Nissan, and test drive those cars. So the same thing applies to the mortgage industry. Again, like I had just previously mentioned, we all may have different loan products, and one may be best for you or better suited for you than another. So it's always good to see what loan products different loan officers have. And also, I'm very big on customer service. So I would say find somebody who best suits you, their personality. Make sure you feel comfortable working with them. I mean, this is a long process, and this is a huge investment, if not the biggest investment they're going to be making. So you want this to be exciting, and you want to find somebody who is going to be answering your questions in a timely fashion, addressing any concerns that you have, and just makes you feel comfortable throughout the entirety of the process.
Got you. So I imagine with that process, are there, I'm sure credit plays a huge role in this, right?
Absolutely.
So what's a good credit score? Do you have the ability to work with folks with different credit scores, and why is that so important too, as far as this process is concerned?
Right. So with credit score, it varies from loan to loan. So for an FHA, for instance, I can go as low as a 580, whereas conventional may require a little bit higher. So it really depends. It's hard to say which loan product is best for someone until I do pull their credit report and take a look at everything on that. So credit score plays a huge part, not solely for determining which loan product is best for them, but also because the higher your credit score, the better interest rates that you're going to be getting.
Absolutely. Okay. So with that, heard you mention credit score. What can someone coming up to you, a potential buyer, what kind of documents can they expect to provide you?
Oh, that's an awesome question. So pay stubs are very important, because I'm going to have to determine your income, your monthly gross income. And also, too, W-2s are very important as well, and taxes. So taxes too, we can get away with getting taxes from borrowers. It depends on the situation. It's just going to vary from person to person.
Right.
And I say that to say if you're self-employed or if you have rental properties, things like that, then taxes are definitely a requirement. But if you're an hourly employee, sometimes your pay stubs and W-2s will suffice.
Okay.
But yeah, taxes, again, your credit report, that is definitely a must as well. Some people come to me and they are so nervous about me pulling their credit report because they don't want it to negatively impact them.
Right.
But when we, as mortgage loan originators, when we pull your credit report, it's considered a soft pull, not a hard pull. So it's not going to have such a hard derogatory impact on your credit score.
Right, that's good.
Mm-hmm.
Okay, and then on top of that too, so you mentioned taxes is a big piece, credit score. What are some other things that you're looking at? Kind of give us a little bit behind the scenes of what are you looking at in your position to qualify someone for
Awesome.
those main things?
So the DTI, which is debt to income ratio, that is very important because some people may make a lot of money but have a lot of debt. So if you're not, walking away with enough at the end of the day to pay a mortgage, then I may not be able to qualify you. So your debt to income ratio is very important. And then as well as your assets. I do have to get your bank statements to take a look at your assets because for somebody who's interested, say, in getting an investment property, the down payment could be anywhere from 15 to 20% that's required to put down. So if you don't have that money, then, I probably won't be able to qualify you for an investment property. So, but yeah, so those are very huge. Those are two big things that I typically look at are the assets, the credit report, like we mentioned as well, and then also the debt to income ratios.
Awesome, good. Well, yeah, that's all the questions I had, really.
Awesome.
Cool, so how can people get in touch with you if they want to get more information about the process and potentially work with you?
Yeah, so you can follow me on Instagram. My Instagram username is loanofficer_Erica Turner, and that's Erica with a C. Or you can email me at erica.turner@homestarfc.com.
Well, thank you so much, Erica.
You're
It's a pleasure speaking with you.
Thanks,
and
guys.
Look forward to speaking to you again.
Sounds great. Thank
Take care.
you. You
Bye.
too.